Using these two moving averages, I'm going to take actual trade, and I will also share with you how you can scalp using this strategy. Here I took a long entry when the green candle closed above the signal EMA. After placing the entry, now I'm going to put the take profit and stop loss. I'm keeping 1 to 2 reward ratio. Ideally, you should place your TP and SL when you're entering in a trade. This is a small trade, and you should also not try to take a big risk when you're trying a new strategy. Besides that trade, I took 9 more trades using the same strategy, and this is the result. Now let's understand this scalping strategy. Scalping is a fast trading style and it requires a smaller time frame for a quick entry and exits. For that, you need a strict trading plan, which I'm going to explain in this video. Firstly, you need to use a smaller time frame like 1, 3, 5 minutes chart for scalping and some indicators. We are using moving averages. So what moving averages do and why we should use exponential moving averages for scalping. The moving average is excellent to smooth out average price. It is also useful to find the trend direction. The EMA is similar to moving average, but it gives greater weight to the most recent price data and reacts much faster. Here you can see both EMA and moving averages are 50, but the EMA is responding to the recent price data. So why we are using EMA or moving averages? The moving averages can help us confirming the bearish, bullish or sideways market. So when the price is above EMA, this is a sign of possible uptrend, but when the price is below EMA, this is a sign of bearish trend. The possible trend reversal can happen when the price breaks through the EMA. You can see it was a bearish trend, and once the price broke through the EMA, it had a trend change. When the EMA crossed through the price, this is called sideways or consolidation. So this is our strategy. We are using two EMAs on a 1 minute time frame. The first EMA with the white line is 91. You can call it trend direction EMA. I kept this in a white color and slightly thick for easy chart reading. The next EMA is of 13 and it is in the red color. This is our signal EMA and this is our entry setup. When the price is below 91 EMA, we will look for the short entries and we are only going to enter a trade when the price candle cross the red EMA line and close. Here is the first entry. Notice how price is below the trend EMA and the price has also crossed the red signal EMA. So we are going to enter a short position with 1 to 2 ratio. Here is a second sell opportunity. We are again going to go short with 1 to 2 ratio. But this time it hit our stop loss, and not only that, the trend actually reversed. Now we are going to enter long after the bullish candle crossed the signal EMA. Remember, price crossing through 91 EMA is a possible reversal. This time the price crossed the signal EMA, but they were not clearly away from the trend line EMA. So we ignore this entry. Here is the valid entry, so we enter long. When the price is respecting the trend EMA, it is a sign of a possible long-term trend. You may hit some stop losses along the line, but the possibility of profitable trades is high. To successfully test any strategy, you will need strict trade entry checklist. For this strategy, you must confirm the trend direction and then crossing of signal EMA and calculation of risk to reward before entering and so on. I have created this checklist. You can find the link in the first comment. This trade was a valid long entry because it did cross the signal EMA and the price was clearly away from the trend line EMA. We are going to get stopped out on some trades, but all we have to do is increase the probability of winning trades. You can maximize it by using trailing stop loss. When you notice price is respecting the trend line EMA, use the trailing stop loss. Basically, the trailing stop loss works similar to the regular stop loss. However, the trailing stop loss helps you to lock in the profit while keeping the trade open to hit the target. Here is the example. As per the strategy, you are going to enter long here with 1 to 2 ratio, but you could possibly turn this trade into 1 to 6 ratio by using the trailing stop loss. Here is how you are going to do it. For a trading stop loss, you are going to enter a trade with a stop loss as usual, but you will put your take profit 4, 5 or 6 times. However, when the trade reaches to 1 to 2 ratio, you are going to update your SL price to the break even, which is actually your entry price. As you notice that the price is moving in the positive direction, you can update your SL to a new swing low. Now, in order to be successful, you also need a good trading plan. In day trading, the trading plan is so important. But if you don't have a trading plan, then there is one magical plan that will surely work, and that plan is called losing money plan. So let's create the plan. Firstly, open a demo account and then set up your chart with EMA as explained in the video on a 1-minute time frame. After opening demo account, you should at least test 10 trades on a pair and spread these 10 trades on different days so that you can fully understand the variety of situation. Also, don't forget to try on other pairs like Euro USD. Before entering a trade, you need to make sure you are entering to win. And with this strategy, you should only enter a trade when the price is clearly away from the trend line and it has also crossed the signal EMA. Keep 1 to 2 ratio and make sure to place a stop loss. This strategy works great in a trending market. And if you lose more than 2 trades in a row, leave it for the day and try next day. And to maximize your trade profit, you can use trailing stop loss. It is workable when the price is respecting the trend line EMA. Lastly, don't get into FOMO. If you have missed the trade, don't worry. Wait for the next trade setup to show up. After being successful on demo account, only then jump on a real account with $100 and start your trades by risking $1. And remember, if you don't have a plan, the plan B will automatically work. Now, how to minimize entering into bad trades? When you see a drastic move away from the trendline EMA, try to avoid entries as there is a high chance of a pullback. This would be the result of entry when the price is far away from the trendline EMA. Now on to the next trade. How to identify the trend reversals so that we can avoid entering in poor trades and cut our losses. So when the trend is bullish and the price failed to form new higher high, instead it crossed through the trend line EMA along with the signal line EMA, then it is a possible reversal. Same applies to the bearish trend reversal. Secondly, avoid entering in sideways market. When you see a trend line is crossing through the price and the price failed to hold above or below the trend line EMA, this is a sideways market and you should never enter in a trade. And never risk more than 1% when you're trading with a new strategy. In fact, always do a back testing and create a list of rules to enter and exit the trade. And very importantly, if you want less riskier trade strategy, then watch this profitable video.